Hello everyone and welcome to the second webinar of our three-part mini webinar series where we're trying to answer the question whether financial close departments are a hidden opportunity for organizations to evolve. So my name is Miha, I'll be your host today, and in the first webinar we try to answer the question whether there are benefits for organization or show what are the benefits for organization that evolves their financial close department and the necessities in doing so. In this second one, we're taking a deep dive into how this looks like and what a good evolved process for consolidation looks like. So without further ado, let's see the agenda. So we're starting with the introduction. We'll look at the process that we see in the companies before this improvement. Then we'll see what takes most time and causes the most risk, how we can make that process better, how we can automate data collection, consolidation tasks, analysis and audit trail, and look at some of the modules that tools offer, like intelligent disclosures, and how do we do it here at Inulta. So speaking of us here at Inulta, we are implementers of CCH Tegetic, which is a tool coming from Wolters Kluwer, and we implement it for financial consolidation, planning and budgeting, other regulatives, ESG. So let's jump right into the content. So on the screen, you see a familiar process, statutory consolidation, and you see it starting with this thing here on the left, so individual reporting. Companies or subsidiaries inside the group have to provide their own data to the group consolidator through this email barrier that you see separating the screen in two, so the bottom and the top part. When data is provided, it's usually mapped to group chart of accounts, and this mapping is done by subsidiaries themselves. So you can then see that the top scheme where the group consolidator is has an orange dot. So they are doing the validation and then returning the data. So they're doing some sanity checks, some summation checks, some checks on the chart of accounts mapping, and basically returning through the email barrier. Then this data is handled again and it's sent back to the group accountant, where then the IC matching, so intercompany matching, starts. And this usually works in a way that the group consolidator is communicating with individual entities and helping them solve out their intercompany relations. And this can be very time consuming, and it can also be a lot of coordination to oversee for the group consolidation department. Once this is done, it's moved back through the email barrier, and you can probably tell by the way I'm framing it, we're not big fans of it. It's moved back to group, and then group can start working on the minority eliminations, investment eliminations, goodwill, so actual consolidation level of group events. And then at the end, this is a very important part of the process, is actually the creation of the final report, and this can be quite unpleasant because it comes with quite a squeezed deadline. So now let's think about what takes most time and causes the most risk. So on one side we have the data collection itself. Usually takes a lot of time. If data is collected manually, we're also posing human error risks and making it even more time consuming. Data that's collected also has to be validated using individual files. Mapping of group chart of accounts has to be maintained and kept consistent. Data checks must be performed, so sanity checks, summation checks, intercompany must be balanced, and the actual report of statements and notes need to be prepared. So here we're talking about that final part. We can have multi-language regulator formats, so tagging. We can have rounding or decimals and dots that change with languages. So there can be a lot of tricky tasks in this final block. So on top of these time-consuming challenges, if we're basing everything on Excel, we can also face performance issues. So how do we make the process better? So what you're seeing on the screen is the process that we aim for in every consolidation project that we aim to achieve, and you can see that it's quite condensed opposed to that previous one. And the first thing that you see is also that now the lights or the validations of data, before we had the orange dot on the group consolidator, now we see it on subsidiaries. So they are already doing a lot of checks on their data. It does not mean that data is then just filed into the final report. Of course, the group consolidator checks, but they get a more verified version of data. The next thing that you see is also the intercompany cockpit, so that box, which helps include the subsidiaries in the intercompany matching, and they're actually matching towards each other without the need to always go to the group consolidator and back. And we can also see that then the final part is a bit reduced, and that brings us to this more condensed process. So let's now try to figure out what kind of features a tool that we procure would have to help us move from that first scheme to this second one. First challenge, data collection. So the challenge is data collection. The goal is to make it as smooth and as automated as possible. This can be further made more complex if the group has multiple ERPs, so multiple systems. So for sure we need a kind of tool that can work as an umbrella, meaning that it pulls from different ERPs into the same group structure. Here, because we're doing ETLs, so extract, transform, load, we are also handling the group chart of accounts mapping. So the data, when it comes in, it's actually already mapped automatically to group chart of accounts. And now the mapping is maintained on the group level and centralized. We are also performing some sort of validation, so a tool should have the option to check summations. And it's worth mentioning that a system like this works as an umbrella, and not only that it standardizes the actual data coming in, it should standardize the way of working. So if you have many countries, many ways of working, when we are in the system, we are all working on the same flows. So maybe we have import, perform data checks, submit for review, do a review loop. So we're all doing this on that same workflow for standardization purposes. So the tool should result in a transparent combination of automatic and manual tasks, because not everything can be pulled with an ETL. So we should always have workflows to handle some of those, either adjustments or manual data entry. The tool should be able to define the data collection and consolidation to follow data availability. So we have statement first to have it ready for management review and audit, and then notes second, as they are often not completely reachable in the ERPs. I mentioned intercompany management before as a very important part of the process, also in terms of how much time it takes. And the goal here is very similar to data collection. So pull in as much automatically, so from GL dimensions, subledgers, intercompany accounts if they're available, and do this automatically. The goal is also to include subsidiaries themselves in the process, like I was mentioning before, the intercompany cockpit. And you're seeing the picture of it on the screen now. So this is just the version of CCH Tagetic, the tool that we use, but the tool that would be procured has to have some kind of feature like this. So Tagetic actually offers more features, so stuff like rule-based intercompany eliminations, thresholds, where users set a threshold under which amounts are balanced automatically. And on the other hand, if they are above the threshold, they can even block the user from proceeding forward, and they have to focus on this above threshold mismatch. And this can help guide the focus to where it matters most. So another cool feature is transactional reconciliation, allowing for the matching to happen at invoice level. Journals, minorities, and goodwill. So on the screen, you're seeing a picture of the OSR, so Ownership Structure Register. And again, here it's important to manage through the workflow what has to be done by hand and automate as much as possible. So in the tool, we should be able to define ownership, events, accounts to get minority investments and goodwill automatic results. Tagetic, for example, offers a centralized view, what you see on the screen, and this is used to handle automatically all equity-related events which refer to consolidation. So equity eliminations, goodwill, minorities, equity investments, and it has the capacity to understand the chronological order of events to keep track of translation adjustments. So I'm talking about historic FX rates. Journals can be automatically generated based on rules or manually entered. So again, if manually, through the workflow that's standardized, if automatic, it's automatic. The group report can then, the group reporting team can then post both top-down adjustments, so on consolidated data, or bottom-up adjustments on individual trial balances of companies. Here we could also talk about deferred taxes, IFRS 5, mergers, deconsolidation, and other automation, but we touch point on a few basic features a tool should have. We should also look for a modern tool where cash flow automation is possible. So what I mean by cash flow automation is we define a cash flow template that can be created, and then we can map specific movements of the balance sheet and profit and loss, resulting basically in a live cash flow view, which is always up to date for the current data. So it's also very useful for analysis, and cash flows can take time to compile. So the template should of course be customizable to fit the exact needs of your company. So on the screen you're seeing the CCH Tagetic cash flow. It's just an example. Modern tools should also have drill down functionalities. So this allows drilling down on amounts, showing the analytical breakdown and how the amount itself is complied. And this breakdown allows for in-depth analysis of the underlying data, so we can split individual account balances by variation types, see who entered the data, how it came in the system, so if it came with an ETL, which ETL, and again, control and insight, trusting the process. Talking about trusting the process, data checks are of crucial importance because of that, right? They're making us comfortable with the numbers that we see in. So there are a whole bunch of different checks that we implement in projects. For example, a basic one would be that IC must not be larger than the gross amount, and then we can do the variations or movement sum to the balance sheet. We can have cross checks, so looking at depreciation in P&L and property, plant and equipment movements, or closing out the P&L with the current result, and much more. Audit trail. So audit trails are very important. I keep bringing up the workflows and the standardization, and workflows usually are defined in the implementation itself with the company. And then the workflow is segmented or made into columns, if you will, and then those segments get user rights assigned to them. And all of this interaction of users to workflow should be stored in an audit trail. And even though the name says audit purposes, I would say 80% of the time this is actually used to understand complex combinations of data and how figures come together. Of course, audit is also important, so we can even in tools give the auditor a user and they can walk through the system, but really keep in mind that this is one of the important features of a CPM software. So if now we recap on the two processes, we can see the processes side by side. And we can see that the first process functions through an email barrier. So there's actual separation between the users. And the second one is a bit more condensed. So we explained why it's more condensed and what things we automate and make easier. But on the other hand, I said the final report comes at an unpleasant time and that it's hard to do, but we here condense it quite a lot. I haven't yet explained how come or with what. So There are tools out there. In our case of CCH Tagetik, it's called the Intelligent Disclosures module, which actually link the database to PowerPoint or to Word. And it means that you can set up your report in Word, for example, the tables, the text, and then you link these tables to the actual database in the background. So it means that if there are some changes, you can just click refresh and you're refreshing those numbers. The system also understands dimensions. It understands previous year, this year. It can even change roundings, the decimals, the years, so 25 to 24, or it can even handle decrease, increase in the text of the report. So this actually has a big benefit for consolidators that are basically quite booked and short on time in the final stages of processing. Considering that we're working in Word, Intelligent Disclosure also can work with Microsoft Copilot, and then helps you even more in that aspect. So now we arrive at the part of the case study. So I will briefly take you through a case study project that we did at Swissbeat AG. So Swissbeat AG is a Swiss manufacturer of industrial grade storage security and Internet of Things solutions. So they make SSD disks, USB flash drives, encryption authentications and more. And they're one of the leading producers in Europe with production in Germany. So a project that Inulta did for them, we actually implemented both consolidation and planning modules. The process before that was based heavily on Excel and legacy systems, and the company was shifting from Swiss GAAP to actual IFRS and changing the operating currency, meaning that data had to be restated. So, quick list of what had to be done. We had to migrate and restore historical data, implement a single source of truth system, automate data ingestion, and enable IFRS compliant reporting, including asset revaluation and depreciation. So we had to also support integration of acquisitions because the group is quite dynamic. So we implemented CCH Tagetik. We brought the unified platform, unlimited scalability, and compliance platform, needless to say, compliant with IFRS standards. So we automated all the data ingestion and eliminations and made a custom workflow in which we handed over the onboarding and training in the final stages of the project. So the results were 100% automatic ingestion of data. We moved historical sub-data and restated it with a custom-built ETL, and the company is now IFRS compliant, and their monthly close is 25% faster. So, like I said, this was done with CCH Tagetik. I've been talking about it for the whole webinar now. You can see the portfolio on the screen. So, ingest from any source, deposit in any source. Wolters Kluwer, the company behind CCH Tagetik, is also investing heavily in new features such as AI auto mapping, SKI, which is basically you talking to your own data, like you talk to ChatGPT, but just confined to your data. So I hope that this webinar managed to paint a different picture, or a picture about how consolidation processes can be improved. And I invite you to tune into the third webinar, where we'll be showcasing how we can make an implementation successful. So more the project management angle. And if you haven't watched the first webinar, I also invite you to see that on inulta.com, go on the blogs and then webinars. And with this, I would also invite you to contact us if anything that's been said today seems interesting to you, if you have any questions about what we do. And with this, I conclude, and thank you all for joining.